Hello everyone, welcome to this edition of Bishopsgate Meets with Sam from Qdos. We are going to talk about the wonderful subject of IR35 and some information around that for everyone today. So we'll kick it straight off, Sam, in this section discussing what is IR35, who does it affect and what's changed maybe over the last couple of years.
Okay, so I mean, in terms of what IR35 is, in a nutshell, IR35 is a piece of tax legislation that dictates whether or not a particular worker is legitimately self-employed. Now, to drill down into a little bit more detail and covering who's going to be affected by the changes in IR35. The legislation, as a rule, will apply where any worker is engaged via their own PSC, so a personal service company. That means there's a separate trading entity sat between them and the hiring organisation and the agency, and the tax benefits to individuals of using a PSC is around the ability to take income as dividend as opposed to PAYE salary. Obviously, this creates a situation whereby that could potentially be abused, and the IR35 legislation essentially sets out who is legitimately self-employed and who's a disguised employee. Now, just very quickly, and the purpose of this conversation isn't to go through in detail how IR35 determinations are made, but I think it's important at the outset just to note a few key areas. So there is substitution, control, and non-mutuality of obligation, which are sort of the three pillars of IR35 tests. So they'll probably get touched on slightly later in the conversation, but it's important to note that any IR35 inquiry will focus on those three key areas. And if there's interest in discussing those further, happy to do further sessions if need be. But in terms of what's changed with IR35 over the last year, historically, the responsibility for IR35 sat with the individual worker. So that worker needed to make their own mind up whether or not they were legitimately self-employed. And if they were wrong about that, HMRC could launch an IR35 inquiry and seek to reclaim any tax liability as a result of the tax structure of the PSC. So that would effectively be treating the PSC worker as if they had been a PAYE employee. Now, in the last 12 months, so in April this year, the legislation changed in a couple of ways. Firstly, the onus was on the hiring organisation to make a determination in respect of each individual worker. So that worker was no longer responsible for deciding for themselves whether or not they were legitimately self-employed. That had to be done by the hiring organisation by way of a status determination statement. The other key change was that the tax liability itself was also moved away from the contractor and moved to either the end hirer, or if there was an agency in the chain, the agency as the fee payer to the contractor would pick up the tax liability associated with the IR35 status of that worker. Now, there are a few caveats to that and a few wrinkles and exceptions, but broadly speaking, those are the changes that will impact on hiring organisations, agencies and contractors within the market.
Fantastic. So based on that, can a contractor still work for their own limited company? If they are, how do they check whether they fall inside or outside from their own personal side, even if the end hire is supposed to make the decision? And if we can touch a bit on CEST, or which is obviously the government checking service, that'd be great.
So, I mean, in terms of whether or not a contractor can still work through their PSC, the answer is absolutely. There's nothing that's changed in the legislation that means the operation of a personal service company isn't completely legitimate. But given the changes to the legislation, obviously the behaviours of the market have changed, and it's put a lot more onus on the end hirer to be taking an active involvement in the tax status of the workers. And in some sectors, a number of end hirers have simply decided to cease engaging with PSC contractors. Now, that decision's been made at a policy level, and sectors such as finance, for example, were very, very quick to adopt that approach. what we have seen, even before the legislation was brought into force, was a little bit of backsliding in terms of that position. And as time's gone by, it's become more and more apparent to more and more hiring organisations that the IR35 risk or exposure that they take on as part of the legislation change shouldn't necessarily prevent them from engaging with PSCs. All it does is put in place a requirement for a robust risk management process. But provided that can be completed, then it's completely legitimate for businesses to continue to engage the exact same PSC workers that they had been doing pre-reform. So how businesses would go about making those determinations is usually with the assistance of outside advice. Obviously, very large organisations will have in-house tax and legal teams that may be able to give some advice on IR35, but the majority are seeking external counsel on that. So firms like Qdos will be working with businesses primarily to look at the overall risk position, but also to dive deeper and do individual status determinations and work with those businesses to make sure that those determinations are properly documented. HMRC themselves did put together a tool to enable businesses to do just that, which is their CEST tool. Now, inevitably, there's a certain amount of having to serve too many masters with CEST. So inherently, it's a very difficult system to put in place for everyone across the market, which is one of the struggles that HMRC, I'm sure, would have faced when designing the system. And in complete fairness, the outcomes of the CEST determinations are likely to be correct. If you fill out the questions in the right way, then the answers that the system will give are broadly in agreement with our own and most other providers. Where CEST does fall down, though, is that there's no sort of verification that goes into that platform. It can be answered in as little as 5 or 6 questions, and as long as the right yes, no buttons are ticked, then you can get a determination statement that says a worker's outside of IR35, which is the outcome that the majority will want. Obviously, that does open up businesses to challenges in the event of an inquiry. So if HMRC can see that CEST has been used, their next logical question will be to scrutinise the answers given. So there's not really a great degree of certainty that can be achieved by using the CEST tool. And ultimately, if the CEST findings are proved to be incorrect by HMRC, then the tax liability will sit with the agency or the end hirer. So there's very little protection there, either in terms of a backstop position if advice has been given incorrectly. So it's not a tool without its uses, but to underpin the entire usage of PSC contractors for any organisation, it would be best advised, to say the least, that some form of external verification is sought beyond CEST.
Excellent, and that leads us on to the next set, I suppose, which is what steps should be taken to be kept informed of everything that's going on. What's the risk in terms of getting IR35 status from an individual and a hirer perspective, and what can you, Qdos, do to help determine status or to work with businesses that may be interested in working with you to help them manage their IR35?
Okay. Sorry, just run through the question set again. I think I've made an incorrect note on that. Sorry.
How do businesses keep informed of what's going on? What's the risk of getting it right and wrong? And what can you guys at Qdos do to help those businesses?
Okay, so I mean, in terms of the risks that would apply for businesses in terms of getting something right and wrong, it really comes down to the tax liability. So ultimately, HMRC would look at each individual worker who was incorrectly categorised as self-employed and recalculate the tax owed based on their hypothetical situation had they been an employee. So the tax calculations behind that are fairly complex. It will be heavily influenced by the earnings of the contractor. So as you can imagine, if you've got, say, PSC contractors will typically speaking be earning northwards of 50k a year, but if that worker is earning 50, 60, 70k a year, their tax liability position is going to be extremely different to a contractor earning 200k a year. So it's important to do some tax calculations, or for any organisation who is engaging PSE workers to do some calculations around their potential tax liability. But obviously the other side of risk is how exposed to that risk any individual or business is. Now, the individual workers, and it is worth a quick note on the individual workers, aren't currently out of the woods just yet. HMRC still have the ability to go back and look at historic trading positions. So any worker that's been working through a PSC over the last few years should continue to, maintain adequate tax inquiry insurance or tax liability insurance if they've done that historically. The businesses themselves, it is a little bit of an unknown quantity at this point as to HMRC's appetite for IR35 inquiries. We had anticipated that the first 12 to 18 months after the reforms have been launched would be fairly quiet, but we've worked with several hundred businesses, so just over 2,200 individual businesses have used our services to assess their workers, and we've already seen a number of those clients receive notifications from HMRC that they want to do some routine checks into their IR35 status. So the outcome of those inquiries is still too early to tell. We don't know how frequently or how widely HMRC have been contacting businesses, but there is already some early signs of HMRC engaging around the new IR35 reforms. I think it's also an important note that the same reforms were made in the public sector back in 2017, and there are a number of ongoing inquiries in the public sector, as well as a few that have resulted in some fairly substantial tax liabilities on the part of some government organisations, which sort of does lead into the first point that you raised in terms of how businesses can keep on top of IR35 issues. There is plenty of trade press out there, and certainly looking for HMRC decisions on IR35, as a periodic check is something that's worthwhile. But simply working with a business like Qdos and others in the market, it is part of our function to make sure that our clients are fully up to speed. So certainly any industry relevant news that comes to light over the course of the next year or so, we'll be updating our clients with and making sure that best practice guidance is updated, and any other relevant information that comes out of inquiries is passed on to our client base.
Fantastic. And what's the best way to get in touch with you guys if we have someone watching now who feels like they want to go through a process of checking the decisions they've made previously, or have some decisions that need to be made going forwards?
Well, first and foremost, just get in touch. So we're Qdos Contractor. You can find us via some fairly basic web searches. We're pretty prominent in the market, and I'm sure the other guys at Bishopsgate will be able to pass on some information relating to us if any of your clients want to make an inquiry. But by all means, anyone who wants to get in touch, even just for an informal conversation about your current approach to risk assessment, it's always useful to get a bit of a sanity check, make sure you understand what options are available to you in the market, and we'd be very, very keen to speak to anyone in that sort of position.
Great, thank you very much for your time, Sam. I will get all this updated and out to our clients for their perusal and their watching. I appreciate your time.
Okay. Cheers, Luke.
Cheers.